Hey everybody, what's up? It is Thursday, September 17th. How's everybody doing? Alright, market was weak today. You know, I've been talking about this, folks. These tax flows that I've been mentioning now for the last couple of weeks. I mean, they are giving us a picture here of a slowdown in the economy. Look, we had the weekly unemployment claims. It came down a little bit, but still stubbornly over 800,000. The data is starting to come in weak. You know, I've said this so many times. This is not about trying to predict where the market is going to go. It's about determining what basic economic conditions are going to be like. Once you know that, if you've got a handle on that, then you know where the market is going to go. If the economy is now starting to weaken once again, then stocks are going to go down. Corporate profits are going to go down. And these tax flows, as I've been telling you, were an indication that we're seeing a slowdown in sales and profits. Now, I think it's temporary. And the reason I say that is because there's still an unprecedented amount of fiscal support. I mean, I look at this every day. And again, I'm ahead of everybody else because I see these flows on a daily basis, and these flows are everything. They are everything. They drive the economy. This is not like, you know, sitting around and waiting for a data release to tell me what happened back in August. No, I want to know what's happening now. No, better yet, I want to know what's happening in October and November and December. The flows drive everything, and I have that information every single day off the daily treasury statement. Again, I have a course that teaches you how to understand that on my website, pitbulleconomics.com. But that's everything. That drives everything. So the reason I'm saying I think it's temporary is because there's still not only an unprecedented amount of fiscal support, but it keeps growing every single day. I mean, we're almost 1.8 trillion over where we were last year. We're almost at 7 trillion in total government spending. I mean, those numbers are, I mean, they're huge. They're enormous. So what's the problem? The problem is, it looks to me like, you know, people are just scared right now. There's a lot to be scared of. I mean, you got COVID going on. You had and still these fires out west. You just had a hurricane down there in the Gulf. The election is coming up. I mean, you got a bunch of things now that could, you know, make an argument as to why people and businesses are kind of sitting on their hands right now. I mean, there's plenty of money flowing in, and I think it's a question of confidence. But it may, you know, it could get worse before it gets better, particularly when it comes to the election, because as I've mentioned in prior videos, I mean, that could end up being chaotic. I mean, that could just be the craziest reality show ever when that thing happens. So yeah, we still have to get through that. So in the meantime, unless I see these tax flows reverse, and that hasn't happened so far, you know, that would be an indication that spending is starting to pick up again. People are starting to go out and spend money. Firms are starting to spend money. Corporate profits will start picking back up. That would be a sign, hey, you got to get back into the market. Let me tell you something very interesting. I've been talking about the weekly AAII survey. That's the American Association of Individual Investors. And, you know, they have been bearish for 28, 29 weeks straight now. Suddenly, last week, there was a burst of bullish optimism, and when I say last week, that's the week ending yesterday, Wednesday. I don't know why that happened. There was a sudden burst of bullish optimism. Bullish sentiment rose by the most since the week ending January 16th. And bearish sentiment dropped by the most since the week ending, I think it was February 14th. So that was like right when we were in that very bullish, euphoric period at the beginning of this year, really before COVID hit. Now, I don't know why all of a sudden they decided to get bullish, but, you know, you got to I'm taking that as a contrary indicator. And as long as these tax flows still point to the negative, market's going to go down. The dollar was weak today. I saw a very interesting kind of decoupling of the recent trading action. You know, what we have seen was whenever you have a risk-on day, you get a rally in the currencies, a sell-off in the dollar. Whenever there was a risk-off day, like today when the stock market went down, usually you would see the dollar go up and the currencies go down. We didn't have that today. We had the opposite. We had currencies rally and the dollar go down. So I thought that was an interesting, you know, that one day doesn't make a trend. Obviously, the dollar's fundamentals are bearish, longer term. I've been saying now, you know, this is a corrective move. This whatever upward move we have in the dollar right now, you got to sell into that. All right, folks, don't forget, go to my website, pitbulleconomics.com. I have my courses on there, the Understanding the Daily Treasury Statement course, 25-hour Forex trading video course, and MMT value stock selection course. And you can sign up for a 30-day free trial for my report, MMT Trader. Remember, I'm the only one who has an applied approach to MMT. Nobody else does this. You got MMT academics out there, they're talking about MMT concepts, they're writing, you know, papers. I'm a trader, I'm an economist. I took the MMT concepts and I apply that to trading and investing. All right, everybody, see you tomorrow. Bye-bye.